And it's now time for the 360 round. And for that, let's bring in our panel to discuss Bitcoin and its recent volatility. Andy Baehr, head of product and research at Coinbase Indices, as well as Mike Dixon, head of research at Horizon. So, Andy, we'll start off with you here. What do you really see as the biggest driver of some of the recent pullback? I mean, technical factors, macro headwinds, or just sentiment overall?
Part of us has to admit that we don't really know what it is, right? Bitcoin's been on this 7-year drawdown in which it's lost about a third of its value since early October. There's plenty of explanations: ETF outflows, digital asset treasury companies trading down at or below NAV, lingering damage from the liquidity event on October 10th, just retail focusing elsewhere. A lot of macro explanations, a lot of technical explanations, but we just kind of don't know. I think the only thing that we feel kind of for sure is that last leg down, once we got below 100,000 on Bitcoin and below 90, that caught some market participants off guard. So we'll see with this renewed expectation for interest rate moves if that helps get the engine started again.
Okay, now, Mike, I want your thoughts here. I mean, are we witnessing perhaps the end of a crypto cycle? I think we're way too early to be saying that. But do you see any degree of a value with this correction, perhaps creating actually long-term opportunity for the bulls?
Well, one thing I think is very helpful when looking at Bitcoin is just to take a little bit of a historical context. And while, certainly a 30% plus drawdown, in the matter of 6 weeks or so seems like a lot. In the big scheme of things, this is kind of normal volatility for the space. Just looking back over the last 5 years, Bitcoin has had well in excess of a 30% correction in multiple years, and it's volatility is 4x if not more than overall stock. So, given the very strong run that we've had in growth stocks overall, and then increased correlations that Bitcoin has been trading with that, I think that this is just a reminder. This is a very volatile asset class, and it is quite normal levels of volatility. While it has been deep and sharp, it's by no means not something we haven't seen before.
Okay, and so Mike, or Andy, excuse me, when we're looking at this Fear and Greed Index, which is, seeing some degree of concern right now, does this historically signal some capitulation or a setup for a rebound?
That's a key question. We would love to think that maximum pain and maximum anxiety is the place where all of the sellers have exhausted themselves. Look, and there's plenty of fundamental support for not only Bitcoin, but the rest of the digital asset class. There's been tons of M&A activity. We still see stablecoin use on the rise and tokenization on the rise, which supports layer one blockchains like Ethereum and Solana. We've seen, in the middle of the summer, outperformance by these alts, by growth names over Bitcoin. So there's plenty of optimism with regulatory support, with legislative support. Really, it really is a markets phenomenon. I guess, the classic view is that, maximum pain will signal the bottom. It really feels like the market is hanging on to interest rate expectations right now. So we never want to quite call a bottom. We want investors, to Mike's point, to understand that this is a volatile asset class. Many people are experiencing digital assets in their portfolio for the first year that they ever have, and they're getting a taste of what some of us are more used to. But the long term, the slow money remains very supportive, and overall, the macro environment, the growth environment remains supportive as well. So we like the idea of weathering the storm and remaining educated on the asset class's growth potential.
Okay, and so Mike, really quickly before we let you both go, what catalysts are you watching as we approach year end that could hopefully reignite some of the optimism? And I will say that today's price activity definitely fueling some of this optimism, at least to start off this trading week.
Well, one of the things I would say, just as it relates to the Bitcoin price, it's especially given, the run we've seen in growth stocks over the last couple of years and the increased correlations with Bitcoin and, the kind of the top of the market. It's an excellent read for market sentiment. And so I do think it's going to be very important for kind of our year-end Santa Claus rally that we hope to have. After a very strong earnings season that we have seen from a lot of the the large mega cap leaders. Having some stability here in Bitcoin and basically finding this bottom and being able to hold that's going to be really important on whether or not we are just in more risky equities overall going to see a strong finish to the end of the year, because the marginal buyer for Bitcoin has become similar to a lot of the speculative growth areas of the market. So pretty important that we do find the stability. I guess that is going to be, of course, the question for December on whether or not we do.
Yeah, and I think that a lot are right now hanging their hat on some more stability and maybe neutrality even in this space, which would be welcome given all the volatility. But appreciate it to you both. Andy Baehr, head of product and research for Coinbase Desk Indices, as well as Mike Dixon, head of research for Horizon.